Hello Barbados and welcome to another episode of Money Matters. This is the show that seeks to highlight the products and services offered by various financial institutions around the island. My name is Zandre Boyne and I am your host for this season. And this season we are featuring the Barbados Stock Exchange. And here with me today I have Mr. Barry Blenman from the exchange.
Thanks, Andre. Nice to meet you.
Good to meet you. All right, I'm certain that our viewers are very interested to get to know a little bit more about you. So if you could just please introduce yourself to the whole of Barbados so they can know you better and what you do at the Barbados Stock Exchange.
Well, as Andre said, my name is Barry Blenman. I'm the operations supervisor responsible for business development for the Barbados Stock Exchange. At the Barbados Stock Exchange, I wear many hats.
Yeah.
I'm responsible for all marketing and promotion of the Barbados Stock Exchange. I also do daily reporting, all daily reporting, weekly, monthly, quarterly and annual reporting for the Barbados Stock Exchange. The reports I generate are issued to the press on a daily basis. We also use them for reporting to the board as well on our performance, and then to the general market to let shareholders know the performance of the companies listed on the Barbados Stock Exchange. I've been here for 8 years. February was 8 years I was here, and I've enjoyed my time at the Stock Exchange thus far, and I'm hoping to put in a few more years here before I move on.
All right, thank you. We're going to take a short commercial break at this time where we will be back with more Money Matters.
Carefully analyze the best way to choose investments, remembering that from time to time, things change in your life, and you may need to revise your personality investment profile.
Welcome back to Money Matters, and we're here with the Barbados Stock Exchange represented by Mr. Barry Blenman, who introduced himself to you at home just now, and we're actually here to tell our viewers how can they actually get involved with the Barbados Stock Exchange.
Okay, well, first of all, let's look at the investment vehicles we have in Barbados on a whole.
On a whole, right.
Generally speaking, what Barbadians are accustomed to would be the commercial banking system or the credit unions. So you have your savings accounts, traditional savings accounts. Then the other services they offer will be things like call deposits, term deposits, fixed deposits, those types of products. You also have on the central bank side, you have savings bonds, which was a popular thing last year. You have government bonds, which is debentures, treasury notes. At the Stock Exchange, we deal primarily with equity, which is securities issued by listed companies, and fixed income securities. I'll touch on fixed income first because it's a bit shorter to discuss, but fundamentally what we have an arrangement between the Stock Exchange and the central bank that allows persons who have actually purchased bonds through the central bank to trade them before maturity. So when you purchase a bond, it usually has a specific life cycle or life period. So say you can buy a bond that may mature in 2032. But say you have an immediate need for the cash now, you can actually sell the bond to another person, a bondholder or a prospective bondholder. But to do so, you have to do it across the exchange for the transparent exchange of that bond between persons.
Okay.
So you can have a situation where, as I said, you want to sell the bond for some immediate need, so you actually conduct the trading of that bond across the board, the stock exchange. Now, the stock exchange, we do not manage the register for government paper in Barbados. So basically, it is done across the board exchange, yes, but that process, the exchange process, is managed by the central bank. For equities, no, that is really our bread and butter, so to speak.
Okay.
So to get involved in trading actual equity, you need to contact a registered broker. That's fundamental. But for persons who have absolutely no idea what to do, the stock exchange is your first point of contact, because what is really needed before you get involved in investing is education. A lot of people would say Bajans are risk averse. Maybe a couple generations ago, but you find more and more younger people are risk takers, and I think that investing is a way for them to actually build portfolios from a very early age, so that by the time they reach to be an older generation, they have a very solid base. Education. We provide basic information about getting involved in investing to shareholders. We actually produce 2 documents that are available on our website. One is called Shares 101, and that document actually gives explanations to prospective investors on what a stock exchange is, what's common stock, what's preferred stock, what's a bull market, what's a bear market, definitions of things you need to know before you say approach a broker. We have a second document called the Guide for Investors. And what that is the perfect document for anybody who is totally unaware. Okay. It basically outlines all the steps you need to take before you go to a broker. It even tests your readiness for investing. Mm-hmm. So if you have a fear, the risk, we discussed risk before in previous episodes, because people tend to be fearful because they don't know what to get themselves involved in. It actually tests your readiness for investing. It actually asks specific questions, and you answer the questions, and there's actually a rating scale. So at the end of it, it will actually tell you how prepared you are for investing. Now, once you read those documents, you should have a better idea. And I'm not saying that this is the end all be all. If you read a document you do not understand, call the stock exchange. Yeah. Fundamentally, if you call here, 9 times out of 10, I will answer the phone myself. Okay. And if I don't, you'll be patched on to me. And any questions you have about investing, you can ask me. I'm always available to take questions, because for me, I'm not young anymore, I'm not old just yet, But I think it is definitely a way for persons to build wealth. I'm not necessarily speaking of having cash on hand, but having a portfolio that you can actually use, especially going forward in your later years, to provide yourself with another source of income going forward. So as I mentioned before, a registered broker. Now basically, registered brokers are persons who are licensed by they are trained by the stock exchange and licensed by the Financial Services Commission or regulator to actually conduct trades on behalf of the individuals. So a lot of persons may call and ask a question like, so I could buy shares myself? No. You have to go through a registered broker, and this person basically is a market actor, a participant. Basically, if you have that desire to become involved, educate yourself. So when you go to the broker, you can have a discussion with this person on relatively fair terms. The broker will ask you specific questions on your investment goals, what you intend to do, what you're looking to do, what you have to invest, that kind of stuff. And basically from there, they will help you chart your course. What is critical for persons getting involved in investing is to know and understand the risk involved. Basically, share prices move over time. Persons tend to look at the value of the shares they hold versus the number of shares that they hold. And that's usually, you get that complaint from year to year as people receive statements, because we issue statements once a year just to let shareholders know, okay, as at this date, December 31st, X year, you own, let's say, 1,000 shares in this security at that price. The next year, you may see the value may come down, and then people want to know, where the money has disappeared, where it's gone to. But essentially, once the volume of shares you hold is the same, you can only lose when you sell. Right. And that's fundamental. So persons shouldn't have many fears getting involved in investing. As I said, if you need to know anything, contact the Barbados Stock Exchange. Yeah.
Well, Barbadians are particularly interested in different forms of investing now, especially all the things that are taking place in the financial sector, interest rates and so forth. Yeah. Now, I want you to walk Barbadians through the entire step-by-step process where they visit the broker and they decide on the shares and etc. Walk me through the entire process from making the decision to start trading on the exchange, going to the broker, and then actually completing that trade.
Okay, so you visit the broker and you've decided, okay, you want to invest in, let's say, Company A. Company A's current share price, the broker will let you know, is the market price, is $1. And you say, okay, I want to purchase 1,000 shares in this company at $1. The broker looks at the stock exchange's trading system, and they basically say, okay, right now the best price on the market is $1.05. So any of the persons in the marketplace are willing to sell right now, they want $1.05 for the shares. So you have to sit down as that prospective investor and decide, okay, if I was to buy 1,000 shares at $1, that's $1,000. But if it's 105, I will receive less shares because the share price that the person is selling at is a bit more. You could decide, okay, no problem, I'll pay the price with the expectation of just seeking some return in the future. The broker says, okay, no problem. There are forms you have to sign because you have to give the broker the authority to purchase those shares on your behalf. So for compliance reasons, stuff like that, due diligence, you sign off. You have to take information like your ID card, your proof of address. That's very important. And because they have to create an account in a system for you, basically to track, to assign these shares to you once they're purchased. You sign off, and that's where your process ends fundamentally. Okay. The broker then is responsible for keying your order in the system. So they take that piece of paper and move it from being a physical piece of paper into being an electronic entry in our system. So basically, they will create an account for you in the system. The system then the depository system, which is the BCSDI system, and that system lets the trading engine, which is the stock exchanges system, know that you have an account in that system to trade for the broker to trade on your behalf. The broker keys the order in the system, and if the price that the 105 that you said okay you will purchase is available on the market, the trade occurs the same time.
Okay.
Instantly. Post trading, now once the shares have actually traded, the broker then confirms that the shares have been purchased on your behalf, and that settlement has to occur in 3 days. But obviously, when you go to the broker, you have to pay for the shares that you're purchasing at that point in time, so they can actually do the settlement process in three days.
Okay.
Yeah.
Now that was a nice and simple situation where the price is at 105, and the person agrees to come in at the same 105 to get the shares at 105, and the trade takes place instantly.
Yeah.
So in a situation where the purchaser is saying, well, no, not willing to pay 105, I'll pay 98 cents per share instead. Tell me what happens there in terms of how the order goes up, and then what ultimately causes the purchase to take place. Well, basically, if it happens at all. Yeah.
In a situation like that, and you say, okay, 98 cents is the highest I'm willing to pay, the broker has to take the instruction from the client. They will key the order in the system, and basically what happens in our system is that the order sits down in the system until that price is matched. So either the person who wants to buy will go up to the price that somebody wants to sell at, or the person that's selling will come down to their price. So the trade actually only occurs when the price matches between a buy order and a sell order. So I mean, an order can sit down in the system anywhere from, because people usually call and ask, how long would it take for my order to go through? It varies. We can never say, because it depends on, it's really demand and supply. We do not determine the share price. The share price is actually determined by buyer and seller. So it's the law of demand and supply, so to speak. And not so to speak, it's actually law of demand and supply. So basically, it's just a situation where once the prices match, the trade will actually occur through the system. And once the trade occurs, both buyer and seller are notified by the broker. They can have the same broker, they could be different brokers. They'll be notified about the transaction taking place. So one person will be in receipt of currency, and one person will have to pay up some currency.
All right, so we've discussed the process for the initial public offering, the IPO. Now, what happens if, what's the process if I already have shares listed and I want to bring more shares to market? They want to list more shares.
Okay, that is a simpler process. Essentially, what you do is you register these additional shares with the commission and you bring them to market. You can advertise, quote unquote, or market the new issue, and basically persons would just go to a broker and basically say, okay, I want to take advantage of this new issue of shares, and it's as simple as that.
So it's a more simple process than from the IPO.
It's not as long-winded as that IPO or coming to market for the first time. Okay. Once you're listed on the Board of Exchange, any subsequent issue is just a matter of registering with the commission and bringing them to market.
All right.
Okay.
So one of the things we were talking about was the visit to the broker, where you tell the broker what you're interested in. Does the broker have a role there as a broker to advise you?
Yeah, brokers in Barbados, there are two classifications the commission would assign. There is a broker and there is a trader.
Right.
The broker can offer investment advice, but the trader takes the instruction from a broker to key the trading system. So the trader can key your trade, but they can't advise you on what to do. The broker can actually advise you on how best to invest your funds. Traditionally, brokers will offer you the best possible advice, but obviously the way in which some persons may be a little iffy about, because the risks involved are there, especially with share price movements. So brokers tend to advise you as best, because you have to KYC, your client, and you have to give them the best advice possible for what they intend to do. Persons, when they visit brokers, need to understand that this person is really there to try to help you in your investment. What's the word looking for? Your journey. And you take the information that they give you you take it with an open mind and know that you can always adjust as your journey progresses with them.
Okay.
Yeah.
So we keep talking about share prices. So we're going to deal with that shortly. But for now, we're going to take a short commercial break, and then we're going to be back with more Money Matters.
Carefully review and file your monthly statements and trade confirmations. Ask your stockbroker if you have any questions or need any clarification. Contact the company's corporate secretary immediately to report any discrepancies.
Welcome back to Money Matters, and we are here with the Barbados Stock Exchange, represented by Mr. Barry Blenman. And before we went on break, we were discussing how a Barbadian who wants to get into trading shares actually go through the process of meeting up with the broker, and we discussed the role of the broker and the fact that brokers could actually give financial advice, whereas a trader only puts through trades.
Yeah.
All right. Now, in terms of the brokers, how many brokers do we have in Barbados, and who are they?
Okay, in Barbados we have 9 brokers. There are 8 brokers who can trade on behalf of individuals or companies, and then there's 1 non-settling broker. Now, a non-settling broker is a broker who basically trades on their own account, and that broker is Fortress Fund Managers Limited. They're in Carlisle House in Bridgetown.
Okay.
They trade on behalf of their mutual funds, which people may know, Caribbean Property Fund. People would be familiar with that term. They trade on behalf of their funds only. The other 8 brokers in Barbados are CIBC First Caribbean Trust and Merchant Bank Limited, Capital Financial Services Inc., First Citizens Investment Services Limited, Caribbean Financial Services Corporation, Sagicor Asset Management Inc., Signet Financial Group, Republic Finance and Trust Corporation, and Royal Fidelity Capital Markets. Now, all these brokers, any person can walk in and ask to speak to either a customer service representative or the broker themselves to get themselves started in investing.
Okay. Now let us discuss one of the very most important things when you're talking about trading in shares, which of course is the price. All right. How is that price determined?
Okay, as I mentioned before, it's basically demand and supply. The stock exchange, a lot of persons believe that the stock exchange sets their prices. We don't. The price is determined between buyer and seller. So basically, it's not a situation where you go to a supermarket. When you go in the supermarket, you want to buy peanut butter. The supermarket sets a price and you have no choice but to accept it at that price.
Right.
When you're buying shares, you're bidding. If you want to buy, you're bidding for shares. If you're selling, you're asking for your shares to be sold at a particular price.
Right.
So the only way the share price actually moves is when buyers and sellers, agree on a price.
Actually takes place.
That's the only time the sale takes place.
Right.
So you fundamentally need to have persons actively watching the market to see how a seller is willing, the price he's willing to sell at, and then you have to decide, okay, I'm going to buy at this price. And if I decide to buy at this price, that's when the trade actually occurs in the market.
All right, so we're talking about the price of shares on the Barbados Stock Exchange, which of course can fluctuate up and down. So tell me what that fluctuation of price, the implications that fluctuation of price has for an investor.
Okay, well, it has 2 implications. One is for the investor, and one is actually for the company itself. Because the share price of the company dictates the market, what we call the market capitalization of the company, which is the valuation of the company at the end of the day. So if the share price increases by 10 cents, depending on the total number of shares the company has issued in the marketplace, it could be 100,000 shares, it could be 1 million, it could be 1 billion shares. We have companies listed in excess of 1 billion shares on the Board of Stock Exchange. Depending on that price movement, it dictates whether the company has appreciated in value or depreciated in value on any given day. For the individual shareholder now, it is more because what people tend to call and say is, the value of my shares has decreased or increased. Yes, they've decreased or increased, but what's fundamental to the shareholder, the volume of shares that you own has not changed. Yes. So if you purchase 1,000 shares at $1 today, tomorrow the share price may drop to 90 cents, so you've lost 10 cents per share, right? But the day after, it may go to 120 or 125, which means it's appreciating value. So the value of what you hold can change on any given day without you actually doing anything. So your investment has the potential to increase in value or decrease in value without you doing anything whatsoever in the marketplace. But we always advise persons to build a portfolio. So the thing is not to buy once. You try to buy on a continuous basis,
Right.
and if there's an opportunity for you to sell a portion of what you own for whatever need you may have, it may be something immediate, something as simple as, you want to take a trip, you want to travel, you can sell a portion of your share, but the key component is to sell when the share price is above what you purchase.
Right.
That is when you make your money. So that's where you actually make a capital gain, is when you actually sell for more than what you purchase. And it's a very simple concept. You don't need to, it's not rocket science really. And a lot of people tend to think that's something difficult to do, but it really isn't. If you purchase 1,000 shares at $1, the only time you should sell is when the share price is above $1. That is, it could be a cent, it could be 10 cents. But the gain is only made when you sell. So you haven't lost if the price falls to 90 cents, because you still have that same base number of shares you purchased initially.
Okay.
Yeah.
So you're actually hinting at ways that an investor can make money
Correct.
from owning shares.
Correct.
Right? But fully outline how an investor can profit from partaking in the Barbados Stock Exchange.
Okay, there are two primary ways. The key, the way that most persons tend to realize that is a dividend. A listed company is not obligated to pay a dividend. However, when they do make profits, you find they will have a meeting of directors, and the directors will decide if they're going to pay a dividend or not. And usually it's cents per share. So you will hardly ever see a dividend of $10 per share. It will always be maybe 10 cents, maybe less, 3 cents, maybe a cent. But that's when shareholders realize some revenue is being generated from the ownership of shares. The other way is by sale. And ideally, as I said earlier, you should sell when the share price has appreciated from your base purchase price. So what shareholders really need to do is to, one, always be aware of what you purchase your shares for. And if you purchase multiple quantities of shares over time, you should try to maintain a record of each purchase and each purchase price. So you know the volume you purchase and at what price. And then obviously when you're selling, you make sure that when you sell above that base price or any subsequent price after that point. So if you purchase 1,000 shares today at $1 and 3 years from now the share price is $3, you could sell 1,000 shares at $3 and you've made $2,000 on your initial investment of $1,000. Or you can sell a portion of your shares, 50 shares or whatever, and you make some money just by selling. But the idea is that, yes, persons may sell on occasion and be spendthrift, for enjoyment. But the idea is, especially with dividends, it's a good idea to reinvest the dividend, because it's money that you didn't budget for. It's like a tax return. You know you're going to get it at some point in time, but you didn't really budget for it. So the idea is, if you get a dividend, reinvest the dividend. You don't have to reinvest all, reinvest a portion. What I like to tell persons, especially people who are new to investing, is that it's important to budget first. That's very, very important. We actually provide a home budgeting guideline for shareholders, but usually it's just a spreadsheet, basically showing you there's certain key ratios you should try to maintain a balance between what you receive, your net income, and your expenses. Because I would tell persons, obviously you pay your bills first. That's fundamental. You cover that end first. Then you have to save something, whatever it may be. You decide on what that should be. Spend something on yourself. That's critical, because we all have challenges in our work life. It's fundamental you enjoy something, whether it be, for the ladies, it may be nails, it may be hair, shoes. The guys might buy shoes, clothes, whatever you have to do that first. And anything you have left back after that, that is what I consider to be your true disposable income. Now, out of that disposable income, you should only invest what you consider you could afford to lose. That's important. That's very, very important, because some people win money and they may just spend it wildly. They may invest all of it and they see the value dwindle over time, or it may increase over time. But what's fundamental, you can invest a quantity of money that you can afford to lose. Right? That's very, very important.
All right. So I have invested, I've purchased shares in company A. What do I get in return to show my ownership in that company?
Okay, when you purchase the initial purchase of shares and any subsequent purchase of shares after that, every time you buy shares, you will receive what is called an activity statement. Right? That's the initial proof. That is confirmation from the stock exchange of from the depository of what you've purchased. Now, every year we issue statements to shareholders basically outlining the value of the volume, share price, and the value of the shares at the last day of trading on the stock exchange for the previous year. So usually they were distributed probably around February, early to mid February, but the date of the statement will be at December 31st of the previous year. That's usually when we get a lot of our traffic, a lot of calls usually come in, because people would see where the value is. Some persons may even forget that they own shares. And they go call and say, but I got this statement, you know, and I don't know what it's about. There are actually people who have probably owned shares 10, 15 years, but the only time they really remember them is when they are issued a dividend or when they get a statement. And that's usually, you see activity pick up at the beginning of the year, because persons are actually seeing value that they didn't really budget for, they know they have. So you get a lot of interest is usually generated around dividend time and statement issuing time.
Okay. We're going to take a quick commercial break at this point, and then we're going to be back with more Money Matters.
Don't rely on insider information. If you trade on a tip from someone with insider information, you can be guilty of insider trading.
Welcome back to Money Matters, and we're here with Barry Blenman from the Barbados Stock Exchange. All right, so we've spoken a lot about the purchasing and selling shares on the Barbados Stock Exchange. Now, talk to me a little bit about the companies that are actually listed on the stock exchange.
Okay, we have approximately 20 companies listed on the board of the stock exchange right now. It sounds like a small number, but our intention, especially this year, the drive is to really try to attract more listings to the market, especially our junior market. Basically, the companies cover a wide cross-section of sectors. You have the insurance sector, you have manufacturing, you have distribution, we have conglomerates as well. So they are a company that persons are familiar with. I can't list all of them now, but they're companies that persons are familiar with. And if you need any information to make that sound investment decision, you can come to us. We have the annual reports, we have quarterlies. All the information you need to come to us and get the information on them.
Okay. No, I'm certain that people are very interested now after hearing you so eloquently describe what the process is like and the advantages to the investor, etc. And they're likely rushing to go onto the Barbados Stock Exchange's website. But when they get there, they're going to see different classes of shares listed there. So if you could just go through that so our viewers are fully aware of what's available on the exchange.
Okay, there are two main types of shares or stock. There's common stock and preferred stock. And the main difference between the two is that the preferred shareholder, as the name suggests, is given a preference, especially in situations where dividends are allocated. They usually come first, and in unfortunate cases of insolvency, when the company is actually now closing up and they're paying out any funds from the assets sold, the preferred shareholders will actually should receive their payout before a common shareholder. On the board of the exchange right now, we don't have any preferred stock listed. The last one that was there was Sagicor's preferred share, but it was a redeemable share, and they redeemed them sometime during the course of last year. So right now it's just common stock listed, but there are opportunities for persons, because all the companies that are listed on the exchange right now are profitable companies. They're all large companies and that persons are very, very familiar with.
Okay.
Yeah.
All right. So we've spoken a lot about the shares, and then you also touched on the fixed income paper, government paper, that also resell on the exchange. But there's also mutual funds that are listed on the exchange as well.
The funds that are listed, there are two funds that are listed right now, and those would be Fortress's Caribbean Property Fund, Value Fund, and the Development Fund. A mutual fund, the equity that they have listed works like common stock, common shares, you purchase and sell them. But mutual funds themselves kind of take a lot of the guesswork out of investing for the individual. And basically, you would visit a fund manager and you invest in the funds, but then the fund manager's responsibility is actually invest those funds on your behalf. So the guesswork is out of it for you. But fundamentally, it's still good to know they would have a prospectus document for the fund, etc. Just like equity and securities, but they actually do the investing on your behalf, and basically you will just receive a dividend of sort based on how the fund is actually performing. But all we do here for those funds is report on their net asset value. Right? That's all we do. Yeah.
Okay, so we've discussed from the point of view of the investor. Now let's have a discussion about the companies that list on the exchange. What's the process like for them?
Well, we discussed investing and how they benefit. So now basically we're going to probably touch a little bit on how a company could benefit from actually listing on the Board of Stock Exchange. So companies would list a security for the primary reason is it's raising capital. That's the broad umbrella. Why a person would want to raise capital? It could be for expansion, improvements of plant and building or equipment. It could be for research and development. But that's an internal business decision. They would make a decision on their own. The process would start with an IPO. We call it like an IPO advisory type position, a sponsor. And that would be the Rolling Stock Exchange. So basically, the company makes a decision, okay, we're looking to raise capital. We don't want to go to a financial institution for a loan, which is debt. We want to raise it through equity. Come to the stock exchange, have a discussion. You let us know what you want to do. Ideally, coming with a prospectus document which basically outlines an overview of the company, financial performance, what you intend to do, where you intend to go. That's ideal because that is your selling tool to prospective investors as well. So you need to have that document in place as well. We usually advise prospective listed companies you have to have a legal advisor, you need to have your accountants, auditors and stuff in place before you make that decision to come to market. The process internally, the stock exchange, there's a listing committee, and you would submit an application form as a fixed form that you can actually collect from the stock exchange. A listing application form, you complete it. There is an internal committee of senior management who would review, do the due diligence on the application, and then they would make their recommendation to the board of the stock exchange to decide on the listing. Once the board is in agreement, the company can list the securities on the board of the exchange. And obviously, that procedure is beneficial two ways. One, the company gets to raise capital, and two, it gives investors another opportunity to invest in something listed on the board of the stock exchange.
I guess it's a situation where as a company was trying to keep as much cash flow as possible,
Correct.
maintain as much cash.
Correct.
It is an attractive option over debt where you have to pay back a set amount over a certain period, and plus interest and so forth. Whereas if you're a listed company, whereas you give away some ownership of the company, but it's also not a debt situation that you have to immediately service from the next month.
The challenge in our marketplace, honestly, is that relinquishing ownership or partial ownership of the company by owners. Persons tend to think that listing means you have to relinquish all ownership of your company, but you could list 25% of your company, you could list 50%, 49.99%, and you could maintain your ownership, but you can still list security and raise some capital. As you said, it offers you to change your capital structure, changes when you list equity versus just going and getting debt over and over and over again. And I would like to encourage businesses to think about it. It's not something that is on everybody's radar. In my time at university, we hardly touched on the stock market. So I could imagine that many CFOs and stuff are not, they're not really, it's never in your purview to study the stock exchange as a viable means for raising capital for your company. Later on this year in May the 25th is the proposed date for an investment forum. And what we're going to do is invite companies, primarily SMEs, but if we can get some larger companies there as well, to actually come to hear about our junior market and the regular market, just to inform persons that this is an avenue you can actually utilize. And yes, there are costs involved with coming to market. You have to make some changes to your organization structure if you don't have them in place already. Obviously, things like you have a board of directors, the proper accounting standards have to be maintained, stuff like that. But ideally, these things, persons may initially, if they don't have them in place already, they see it as a hindrance. But fundamentally, all of the large companies in Barbados started at some point, and they had to mature along a process or a journey where they had to have these structures in place. So if you want your business to grow, these are things you need to do anyway, right? For it to grow beyond its boundaries, so to speak. So we're going to invite our brokers We're going to have them invite some of their clients, prospective listings to the stock exchange. We're going to go there. We have reviewed a couple companies already. So we're going to send invitations to those companies, their MDs, CEOs, chair boards, to invite them out to come actually hear about the stock exchange and the opportunities that it can afford them.
So we're discussing the process for companies who want to list their shares as it relates to the Barbados Stock Exchange. But I also know that there's a process at the Financial Services Commission in terms of registering as an issuer and registering those shares with the Commission, etc. So if we could.
Okay, we mentioned the prospectus document before. That document is critical as it has to be submitted as part of your application as well to register the shares with the Financial Services Commission. That document outlines the number of shares you intend to issue, the prospective price you want to issue, and other information about the company. But the Commission uses that document for its due diligence. And because that document is what prospective investors will use to make their decision, and they need to be sure that the information that is being distributed to shareholders or prospective investors rather is sound. It makes financial sense. This company has the potential to grow, and that nothing strange or peculiar is going on with this company.
Okay. All right, so we're coming to the end of this episode of Money Matters, and I'm going to give you the opportunity once again to appeal to our viewers in terms of investors, both investors as well as potential listees. So this is your chance to sell. So
investing in shares listed on the Board of the Stock Exchange actually affords prospective investors and current shareholders the opportunity to build a portfolio as well as create wealth through share price appreciation fundamentally. Typically over a 10-year period or so, you find that share prices will appreciate in value, which means your baseline quantity of shares, the value associated with those shares will increase over time. What I would say and caution persons is that share price performance trends with economic conditions. Yeah. When the economy is doing well, companies are doing well. They make more profits, they pay a higher rate of dividend, share prices appreciate. When you find that there's an economic downturn, companies will hold back, they will pay a reduced rate of dividend if they pay one at all, and share prices tend to contract. So you be aware of those types of scenarios, and you can actually watch the trends over time. We have been experiencing tough economic times in Barbados. At the stock exchange, we actually saw share prices contract. Right now, the majority of our share prices are now on the up and up. So persons who would have maintained their patterns of purchasing 2-3 years ago, most of those share prices are back up. We have securities that have increased $2-3 in price actually right now on the Board of the Exchange. For the listed company or the prospective listed company, it is an opportunity for you to raise capital cheaply, because there's no specific repayment over a period of time to a financial institution. So basically I encourage everybody, if you know nothing about investing, call the Barbados Stock Exchange, get your feet wet, and build a portfolio for you and your future.
Thank you, Mr. Blenman. Join us next week for another episode of Money Matters.